retail prices is at or near all-time record high. Demand has held up excellent. The consumer hasn't really cracked when it comes to beef yet. Production has been low. Slaughter is down quite a bit on the year there. And so that's led into this higher retail price.
Welcome to The Derivative by RCM Alternatives. Send it.
And this is Jeff Apel, principal at Wharton Capital Management. I'm here to talk about our program and the price of beef and cattle prices here on The Derivative.
How are you, Jeff?
Good. How are you doing, Jeff?
Good. Jeff and Jeff, back again.
There you go.
You were out in the western suburbs, Chicago?
Mokina.
All right.
That's kind of by Tinley Park.
Okay. Most of the way towards Kankakee?
Well, it's about 45 minutes from Kankakee. We're north of Kankakee.
Mokina. I'm sure I played in a baseball or softball tournament there. So start us out, how you got in the business, when you joined Wharton, all that good stuff. Give us some background.
Boy, I got in the business probably in 1998 after coming out of college. Started in the cattle pit. My dad was a trader in there, kind of got me started. I moved into floor brokerage around 2003 and ended up partnering up with Bob Wharton on some floor business that we had together. And then as we saw the market move into electronic trading, we decided to try to start up a CTA and leverage some of our contacts and experience into that space. And that was Bob started in 2011, and then in 2014 I joined up with him.
Nice. And give us some so was your dad a local, or he was trading for himself?
He was a personal trader. Yeah, he was a local, I guess you could say. He was a floor broker for a long time, and then a local. He probably started on the floor of the CME in about 1968.
Ooh.
So
he saw it all.
He was in the egg pit, and then moved into the cattle when that contract became, the new hot thing.
Right.
The first live delivered contract, that kind of stuff.
And talk a little bit. So he was filling paper, or he was trading his own account. And then when you got there,
both.
You were doing the same thing. All right. Most guys were doing both.
Me and yeah, you could do both back then. You could fill paper and trade for your own account in that pit.
And for my buddy George, tell the audience what filling paper means.
Oh, filling paper? Well, that's like if somebody gives you an order, a customer calls up and says, buy 10 August cattle. Well, then you write it on an order and you walk in and there's a whole group of people in there. You say, what's here in August cattle? And they give you the bid offer and you buy them.
Right.
So you're physically
filling orders, basically filling paper for customers.
Yeah, it'd be called execution now.
Yeah. Right. It's the computer. You were the human computer in the middle of the pit.
Yeah, it's called execution. So
yeah, and back in the days, that was the kind of the delineation. I guess a lot of people did both, but there was paper filling brokers, guys filling orders, and then ones who didn't do any of that and just traded for their own account.
Correct.
Remember both. And then what were the meats were like notoriously illiquid back in those days?
Yeah, I mean, they had low open interest for a long, long time. It was there wasn't a great story for a lot of years, and there were other products that people were more interested in that had a bigger volume, bigger open interest. The S&Ps or Eurodollars or something like that. And so yeah, they were, and they're always kind of illiquid. I mean, they're not the most liquid contract we've got. Even though open interest has grown to record, it still can be a little bit tricky on the liquidity side.
You ever dabble in the pork bellies?
Sure. I've traded pork bellies when they were available. Yeah.
In the pit?
Yeah, absolutely.
Yeah. But that came and went, right? Like when did pork bellies go away? Like
yeah, I don't remember the year, but they had a
10
problem
plus years ago. Yeah.
Yeah, quite a while ago, but they had a problem with liquidity for one, and I think the information changed. They didn't make bellies to fit that contract spec anymore. There's something with the contract that kind of made it obsolete.
like a pork cutout versus the pork belly versus yeah.
Yeah, I think
Um,
the Packers stopped making them that way, or fresh or frozen, or
got it.
I don't remember what it was.
And give us what some of your favorite floor trading stories. Got any good ones?
Well, I mean, I've got a few. I mean, the ones we can that are appropriate. Um, it,
This
it
is it can be R-rated. Go ahead, whatever you got.
uh, No, I mean it was just a great place to be. I mean, there was a lot of collaboration. There was a lot of bouncing ideas off each other. There was an informality that we really liked. Is you could once you got down there, you could talk anyway. There was a certain vernacular that you could use and talk. You could talk loud. You could yell. You could be quiet. Obviously, language didn't matter what you said as long as it was didn't really hurt anybody or it wasn't totally inappropriate, but you just had a lot of freedom down there, and that was really what ended up being, I think, the best part for me was that type of environment. It was allowed a lot of creativity. You could sit there and stare at these numbers. All those walls had numbers on it, and you could just stare at them and pick something out and say, I wonder why that's doing that, or I've been watching that. Or you also could trade with your hearing more too. Like now you have to see something's moving on the screen, where there you were kind of using all your senses. You could hear a
Hmm.
loud yell go up from, let's say, the belly pit and be like, oh, what was that? What happened? Or the hog pit, or even if it was the equities, a loud roar came out there. Well, then you better start looking. Something happened somewhere. And so you could kind of, instead of, you might miss if you don't have your quote screen set up right or your alerts set up right, you know, the, it's just a lot quieter, so
Hmm.
that was a long time ago, but it, that was what I liked the best about it.
Yeah, and you're no offense, but you're the right body type size for it too, right?
Well, that
What
didn't
are
hurt.
you,
Yeah.
6'4" or something? How tall are you?
I'm 6'6".
6'6". Sorry, I shorted
Yeah.
you 2 inches. Yeah, big guy.
And it helped. One of my first jobs actually down there was a summer thing. They needed someone to, so it was unemployment number in the Eurodollars, and Revco had a problem with some locals were bringing people in to box out the clerks in a certain way because space was so premium, it was,
Yep.
and so you would stand in there. So they brought me in for this unemployment number to just stand back to back with this guy and push him the whole time. Like it was like they brought me in and I got ridiculed for it too. And I had to
Yeah.
stand there for I think about 2 hours and just push against this guy to keep our lane open.
How
And
big
there
was the
were,
other guy?
I mean, he was a grown man. At this time, I was probably like 17, 18, something like that, but I was a young kid on a summer job as a runner. And
They're like, I got just the guy. Hey,
yeah, they,
Jeff,
they
get
brought,
in there.
yeah, they brought me over there. I mean, I was pouring sweat and they were pretty mean to me too, like, why are you here? Because they know you're not there every day.
Yeah,
And it
yeah.
was this big day. So that was, I think, one of my first. That's where the size really came in handy a few times, and other times it did too. I mean, um, so
And were
yeah, it
you
was a
loud,
factor.
right? You're screaming, but the cattle pit
Yeah,
wasn't that
everybody.
big. How many guys in the cattle pit?
Oh, there were probably 50 to 70, maybe something like that. 50
Okay,
people, 70 people. So it could get really
right,
crowded when it was busy, but um,
right.
there were
Versus
plenty
the
of
30-year bond was maybe 200, 300 at its peak, and
yeah, you're right. Or
S
the
and
Eurodollars was
P's
thousand,
couple. Yeah, exactly.
you know. So yeah, it could be. It was a factor, but it was a factor for sure.
If you could explain what's traded there, like what there's two types of cattle contracts, explain the differences, kind of how you looked at those contracts.
Well, there's live cattle, which are, animals that have been put in the feed yard and fed, fattened up to whatever weight they've decided to put them to, and ready for slaughter, basically. Then there's the feeder cattle, which are those are animals that are coming off grass and going to be put in the feed yard. So
So they're
they're
both
gonna,
alive when we
yeah,
trade
they're
them.
both they're
Yeah.
both live. Feeder cattle is an index. The contract's an index that's made up of all these different auctions throughout the country, and live cattle is still live delivery if it comes to that.
Hmm. And then when I buy it before it goes, I'm at an auction house. Where are those mostly? Texas, Montana. Where are those auctions held?
For feeder cattle,
Yeah.
they're all over the country. I mean, Florida's a huge feeder cattle state.
Hmm.
Obviously, the prairie country or pasture country is big. Montana, that type of area, South Dakota, North Dakota, New Mexico, Arizona, Texas, of course. I mean, anywhere there's grass,
Yeah.
there's feeder cattle. So there, a lot of states have them. You
Hmm.
know, it's
And what's the size? Like when I buy them from in that auction, how big are they versus when they leave to get slaughtered?
well, the weights can the breakdowns anywhere from 1,000 pounds to like 500 pounds. You could, depending on how long you want to feed them and what weight you want to bring them to. I mean, different people are in different businesses of
Hmm.
how long they feed them for, and a lot of it, and then some of it's dependent on the time of the year too. As you move into the winter and you get frost, certain animals come off grass, or they decide to winter them and then they come off in the spring. So it's kind of like Mother Nature decides some of that.
Yeah, we had an old blog post we'll put in the show notes of the picture from space that proves commodities or diversify or something like that. I can't remember the exact title, but it was when there was this freak June or maybe it was August, September snowstorm in the
Uh,
Dakotas, I believe. Right in the cattle hadn't gotten their winter coats yet.
yeah,
So it killed a whole like tens of thousands of cattle, caused some limit up moves for a couple days.
yeah. I
Um,
mean, absolutely. The death losses, it can be a thing if it's bad enough at the wrong time of year. Um, and the
and
biggest thing
then
is they lose weight.
they lose weight just being out there or when they're
Well, yeah,
cold.
because they have to, their body takes more calories to heat themselves up,
Mm,
and they don't get, sometimes they can't get to the food either.
mm.
So they can't, if they're whatever the hay or the feeding agent is clogged, they can't get to it. And they can't walk in the snow drifts or what have you.
And now, what are they mainly feeding them in the feedlot?
That's a mix of corn and soybeans, that kind of stuff, Milo.
But that's the game too, right? If corn's more expensive, I'm shifting to more soybeans. If soybeans are more expensive, I'm shifting to corn.
Yeah, I mean, I'm sure every operation has a different mix their proprietary mix or whatever they have tested that works best for them, the type of cattle they like to feed, the conditions, that type of stuff. So, I mean, that would vary on an operation by operation basis.
Mm. But I wanted you to tell me some great line of like they put on 20 pounds a week or something when they're eating this stuff.
Well, it depends. Like the daily average gain is like, we think we used to say it was about 3 pounds a day.
Ooh.
Uh, and I don't know if that's still the same as it was. I know that they have been feeding cattle a lot longer days. And I'm sure they've improved the rations to try to get that to optimize it. I'm sure there's stuff in there that is optimizing the feed, like weight gainer or what have you.
We got the basics now. So let's back up. We wrote a blog post. You gave us a quote for it. Few press articles lately, right? Eggs were in the news from whatever your political links are. Forget that for a second, but egg prices had spiked. And now there's a couple articles. Beef prices are the new egg prices. We're at, well, you tell us the stats, but basically we're at some near all-time highs.
Yeah, I mean,
Um,
retail prices is at or near all-time record high, and that's you know demand has held up excellent. The consumer hasn't really cracked when it comes to beef yet. Production has been low over the last number of weeks. Slaughter is down quite a bit on the year there, and so that's led into this higher retail price. And the retailer's got he's got margin to worry about as well. So they're keeping the price high right now.
so so let's pull on that thread. So they're doing it on purpose, right? They control.
Well, not I mean, they just have their pricing models, so they have whatever margin built into whether it's a store margin or a meat case margin. I mean,
Mm.
they want to try to maintain that, and
And
so
what's
that
that chain look like? It goes from so feedlot, right? It goes from the rancher to the feedlot to someone like Purdue or something. Like who's buying it in mass from there? The what do you
well,
call
like a
those?
like
The
a
producers?
well, like a chain store, that's
Yeah.
Jewel, something like that, or Walmart. they're the ones buying it from, let's say, the Packers, which would be
The Packers, that was the,
Tyson,
yeah.
uh,
So
JBS,
the Packers
Tyson.
buying it from the feedlot.
Yeah, they're buying the live animals, and they're the slaughterhouses or the harvest. Um, they're processing the animal into the cuts of beef that's either the consumer has told them to, or that the common ones, whatever you want to say, ground beef, that type
Yeah.
of stuff.
You ever been to a slaughterhouse? What's that
No, I
like?
haven't. I have
No
not.
thanks. I might
No.
swear off beef, right? It's not worth it. Um, so back to the storyline. So those retail prices, that's across all of these cuts and everything? And that's
Yeah,
as it
that's like
hits
the
the store?
average. That's the average retail. The USDA releases the average retail price where they smush them all together and make an average out of it. So that individual cuts could certainly be higher or lower than that. But, like I think the 50s just made all-time record highs coming into the from Memorial Day to July 4th as the retailer was featuring more ground beef. And,
Mm.
because it's cheaper, the average cost is cheaper for ground beef. So they decided
And
to
what's the
feature the
50s? What does that mean? 50%?
50s is like is half fat and half beef. So they
Got
mix
it.
that with a
Yeah.
90 to make it 80/20,
Got it.
which is what you get in the store, 80% meat and 20% fat, which is your basic like ground beef that you go and make a meatloaf out of or what have you.
Um, Love meatloaf. Meatballs.
Oh yeah,
The
meatballs too, sure.
so what's that price? Did we say the price? It's like close to $10 a pound, or what is that?
I thought that, oh, gosh, I don't have that offhand. I thought it was eight something, wasn't it?
Okay.
It was eight something on the average.
I had a CNN with 926 a pound,
Okay. Yeah, I mean it's a moving target, so um yeah, I mean it's up there. That's really high for ground beef.
right?
When you talk about feeding for large parties or family gatherings, that type of stuff, your outlay can be a lot for a family on a budget, that type of stuff. So I mean the
So tell us, right, the old line in commodities, the cure for high prices is high prices. So,
correct,
right, like so who's controlling that? If they slaughter more, then the price go down, there's greater supply,
correct.
but then they have less for the next cycle, right? So talk through
Well,
that whole process.
well, the right now the slaughters is reduced because packers are also losing money, so their cost to buy the animal is all-time record high last week also.
Hmm.
And
Which is the futures price we see basically, the
well,
live
that's
cattle
that's
price.
yeah, but the live cattle price was like 230 to 240 last week, and the August futures are here at 227. So they're
Okay.
carrying a significant discount to
Hmm.
that record high price, which is I tend to think that that's futures markets do that. When a price is record high, they don't anticipate it staying forever. They start to look for the top, and they would move to futures under cash, right? Because of that statement, the cure for high prices is high prices. That a
Right.
lot of times the futures move to some sort of discount, whether it's in a lot of in all markets, I think, kind of.
And
Um,
that's per pound. So it's 230 per pound for the live animal.
yes,
And
yes.
then it gets to 950 in the store, basically. So there's
Well, after
whatever
it's
that is.
processed, and
Yeah,
yeah,
yeah, yeah.
after it's processed and deboned, and there's the drop value comes out of there, which is that's the guts basically, and that gets shipped overseas primarily.
Ooh, what now we're talking. What do they do with that?
Well, I mean, we don't eat it here, so that
Yeah.
goes over there, and they either eat it or process it into
Tripe. What does that come from?
something like that.
So why are the Packers losing money? Because the live animals. So how does this resolve itself? Who has to move first?
Well, I mean, you gotta either have a price where people don't want to eat, refuse to get consumer backlash, switching to other
Hmm.
products, which we've talked about, I think on some posts. Um,
Which is what, like, a McDonald's will be like, hey, we're losing money on these. Let's switch a little bit more to chicken, something like that.
well, and McDonald's has done that.
Promote it more.
They just added the snack wrap is back, and that's a chicken product.
Hmm.
So that's already kind of happening in the menus. It just So that's one way it can have is you have a shift in demand, let's say, and people start eating something else or finding substitutes. And the other is you can get more cattle, and we think you're pretty close to running into more cattle seasonally here in August, September, and October. Supply is going to increase. Um,
But
so those two things will eventually take care of it.
and how long does that take? Like, what's the total herd in the U.S. look like?
Well, the number of cattle on feed is like 1% below the 5-year average. There was just a report on Friday, and we're a couple percent below a year ago on the on feed numbers, 2% below a year ago.
So supply down. And how many is that? I'm looking back at our blog. So 2 points we had in our blog. The cattle herd's at its lowest level since 1951
Yeah,
at
yeah,
86 million head.
yeah. But that includes like the calves and animals that are out on grass still, cows. So that's
Mm,
every type of animal. Where feed yard animals are just the steers and heifers that are in the
that
feed
we're gonna
yard.
eat, basically.
Yeah, though, and then they do slaughter cows as well for that's primarily ground beef, and the cow slaughter is down, you know, quite a bit, and that's where that 50-year low comes from. Is that we had years of drought that ended up liquidating the cow herd.
Because they were malnourished. So you had to
Well, you
cull
didn't
them
have
without
grass. You didn't have
what's that?
grass. They didn't
Uh,
have grass. So if there's no grass, then instead of having them starve out there, you have to, send them to market.
got it. But they're
So
not
that
just dying on the field.
No, no. I mean,
Yeah.
there was some death loss probably, but no, generally not. That's not what it's from.
So 86 million total, then what we have here, 11 million are in feedlots, basically.
Yes, correct.
And what's the highest that number's got? That go as high
I don't
as
know what the all-time high is, but it's
close to there.
well, it's not. I'm not sure exactly what our
Yeah.
relationship to that right now.
And talk about how long does it take a new, is it 2, 3 years? Like a calf's born to when it can go into the feedlot. How long does that take?
Well, it's born, and then it depends on what weight they want to put them in at. If they want to put
Mm.
them in as calves, then they'd be born in the spring, and then in the fall they would go into the feed yard. If they're going to take them in another year, make them what's called a yearling, then they would winter them and then put them on feed in the spring. So
So how'd you learn all this stuff?
over time,
Yeah.
just I mean, talking to people, listening, a lot of asking questions, a lot of wrong answers. I mean, it's been time. Listen to my dad, all the time. So it's just it's kind of something that instead of talking about sports, we talked about the cattle market. That's kind of where it came from.
And sports, no?
Not that much, no.
Hmm.
But
The and you guys weren't watching Yellowstone, right? Like basically the
no,
lesson I
no.
took from
Back then there
Yellowstone
was
is this is a terrible business to be a rancher. Yeah.
they can't- there used to be an old joke that whether you died rich or poor in the cattle market just depended on when you died.
Yeah. One of these days. Um, all right, so how does it resolve itself? There's more calves coming.
Yeah, you got to have what's called expansion, and that this last report showed that there were less heifers on feed than a year ago. So those are the females, and in order to have more animals, you need to start retaining the females and breeding them, and having put them out to pasture and having them have calves, and so that takes a couple of years to get. You got to hold it back. You got to get it, you know, inseminated or pregnant, and then have the animal all the way to the next cycle. So that can take a while. That
Like
could be
have
a couple of years.
a couple
It could
years.
be a couple of years. Yeah.
But that's the cycle we're talking about. That's
Yeah. That's where we're at.
the cure for
Retention
high
is
prices because those ranchers are like, all right, prices right now to retain more females, get more calves.
correct.
Right? I'm gonna get my money back plus some. So are these who's making the money right now? The ranchers?
Cattle feeders have a profit right now. Um, and that's probably about it. I think the cow calf guy is probably making some money too. And we don't really track that as much as the Packer margins because of the time frame we trade. We trade it closer up to the front, and so Packer margins tend to be, we think, a little bit more important um, than that part of the cycle. When you're talking about something that could take up to 2 years to happen, that's not something for our style, that we really track a
Yeah.
ton of.
Which we're going to dive into Wharton in a sec. One more question on should we put Impossible Burgers and Beyond Meat to bed? Like, wasn't that supposed to get the country and the world off beef,
Yeah, I mean,
save the environment, all this, and yeah,
there was that buzz, but I think that if you look at the stock price of those companies, that it's kind of, the
yeah,
market has
destroyed.
voted that um, that they didn't really want that type of thing. So, I mean, I don't have an opinion on that, but it looks like they're having some headwinds, let's say.
Well, for sure, if you were like 5 years ago, you could have made an argument of like cattle business, stay away, right? They're coming out with all this fake meat.
Yeah.
Like it's going to be a hard business, but it went, as usually happens in the commodity markets, it went exactly the other way. Probably because of that, right? They drove down some prices in the beginning. They didn't retain enough females and grow the herd enough, and boom.
Well, and I mean, beef demand has been excellent too, and whether it's these carnivore diets, or, it really came to the pandemic, really, everybody sat at home and ate, and we
Yeah.
started eating steaks. They couldn't go out, so they went and made steaks at home, and that ended up spurring this big demand push that we still haven't really come to an end to yet. I think there's signs that it could be slowing. There are indications that the consumers in, some they're experiencing some headwinds, whether it's credit card debt or foreclosures or what have you. Um, but it still hasn't totally happened yet either.
And I'm
It's
always
still kind
amazed.
of a, go ahead.
Sorry, like here in Chicago, right? Like we can put out a new steakhouse where it's an $88 steak, like nobody's business. And I'm like, how can they keep rolling these out? And the next one's just more expensive than the previous one.
Yeah, and that part of the restaurant business has proven to be has been really resilient, and I maybe it's because of the income level of the people that are going there are somewhat more insulated from inflation, or is it corporate type of expense accounts that do that, or travel, which is all seemingly, or I mean, the stock market's all-time highs, and there's unemployment's not really an issue. So, you know, the case, those two things would need to change to have a real demand event, right?
Yeah.
I think for that would be more widespread or deeper. Let's put it that way.
But it's great to me when they break the $100 marker, they all seem to try and stay under $100 for now. I just pulled up for fun here the Steak 48. Have you been there?
I don't know. I've
Um,
heard of it though.
he was the Mastro's guy actually, and he sold Mastro's for like 80 million. They had four, five, six restaurants in Arizona around here. Waited out his non-compete for like 2.5 years, and then boom, launched Steak 48, which is essentially the exact same thing.
Hmm.
Um, but right, a New York strip, 16-ounce New York strip, $75. Bone-in ribeye, 22 ounces, $81. 45-day dry aged, $99.
Yeah,
Like that's insane.
that's pretty expensive for a steak.
Right. You're telling me. All right. So Wharton, so you don't just do this for fun. You guys trade this and
Right.
make a living trading this in and out. So give us a little background on Bob. You said you joined him a few years after he started, but yeah, tell us what you guys are doing at Wharton.
Well, so then we use all this knowledge that we've accumulated over the years, and things we've seen, and we decided we should try to leverage that and start up a CTA, which allowed us to get into a bigger pool of investors than just your friends, or just having accounts with buddies or what. And so we decided to do that, and we had always worked well together. Bob was a floor broker, I was a floor broker. We had partners on some business, and we got along well. We spoke the same language. We kind of Bob's from Nebraska. and grew up in the cattle business. His dad was a cattle buyer. And so we had this kind of we just spoke the same language in a lot of different ways, and decided to become partners, and started opening accounts.
And
Um,
so fully discretionary program.
yeah, we're a fundamental discretionary program. We get a concept or an idea, and then try to see where that fits into the way the board is priced, where the futures are priced, and which month, which instrument, which strategy, the best way to take advantage of that. Sometimes there's different stories, and so different products end up fitting that, whether it's a spread or an option or futures. Um, we tend to
And
use a lot of options, long only options, puts or calls, um, with the of overnight event risk and macro event risk announcements. We think that's a way that we try to, manage risk for our customers. So it's all we try to do a defined risk strategy on options. Is what we use a lot of. Now we do futures too, and we do spreads as well, but we like to use long puts and long calls mostly.
this is all in cattle or other
Uh,
meats?
we we also do the hogs as well.
Okay.
Um, the hogs is another part of our business that we trade them a little bit, maybe more technically with a fundamental bias. Um, but they kind of go hand in hand. There's some overlap in the markets, so we watch those and trade them
Was
as well.
right. An economist would say they're elastic in price, and people would switch to pork, right? If beef's too expensive, I'll eat more pork. I'll buy a pork tenderloin for dinner for the family.
You would think. I mean, yeah, in theory they should. It hasn't really happened that way yet, but I think we're getting ready to test that with the price of beef so high that you would think pork would catch some sort of bid somewhere. I mean, there's issues with the quality of maybe the pork chop that they're providing now maybe isn't the best all the time, but
Hmm.
they've when pork was called the other white meat, it was,
Mm-hmm.
they made it less
So
fatty, more health. They were trying to compete with chicken
yeah.
on a fat base. That's when like fat was a big problem. And so I think that some of that changed the breed of the animal maybe, but you would think pork would get some sort of play here on the feature side of it for retailers to offer something that um, is more affordable for the family as you move into the fall. Um,
And and so the option, right? Cattle, especially, is known for these big limit moves every now and then.
yeah, it
Um,
can,
so what
yes.
talk through some of that. What's the longest you've seen a bead limit for a couple days? And what
Yeah,
is that?
that had to be Mad Cow in 2003 when they found the animal here, and then it was down limit for I think 3 days. It traded maybe the
Hmm.
third day, but they expanded the limit in there too. So that was the first time they ever expanded them. But I think that it can now the limits are so big that I don't think it's really as much of an issue. Um,
What are they? Not to
oh,
put you on the spot.
$9. I think $9 is the August the futures limits.
Okay.
975 maybe. Yeah, it's very big.
Um,
Um,
yeah, very big. But to your point, those have happened over time. So your guys' experience was, hey, it's better to do options sometimes, not have that spike risk.
yeah, I mean, the event risk can be serious. There was a plant fire in I don't know what year that was, 2019. A plant a slaughter facility caught fire, and that was a sharp down move. Um, that you might not have been able to get out of in the futures effectively, depending on your position size or how quickly you moved. Um, there are events from time to time, and we've seen them, so that's how we choose to do it. And
Mm.
we're like medium term time length, so we think that if we really get onto something, that the options offer a way to take advantage of that.
And there's no way to trade really, or do you think there's a way to trade those events, right? You just have your positioning and the events are going to happen like in any other market, and you just got to kind of sidestep those landmines.
Well, I mean, that's where like money management comes into place, or that's why, well, with position sizing, or through that use of the options. At least you know your risk. I mean, they can announce anything tonight, and whatever we paid for those options is all we can lose.
Right.
So that it's defined risk. It's almost like if you have an error, you want to establish the loss right away, and then you don't trade an error right throughout the day or something like that. Um, you just get out of it.
Right. And so what does that look like? How much are you willing to risk per trade? And do you have like do you have limits in live versus feeder? Do you have limits in pork?
No, because we don't have a hard fast thing on that. That's why we use the options, is because it can take time to develop some of these stories. The cattle's a unique contract because it is still a live animal, and so it can't be stored like
Mm,
gold. Like gold, you could put in behind your desk and leave it there forever, right? And oil, same way. Corn has a long storage life, but the live animal doesn't. I mean, it has to come to market at some point, and so it can take time for these things to develop, depending on how fast they do or don't come to the market. And we're seeing some of that right now as days on feed has increased tremendously, and that's why we're seeing weights like 20, 25 pounds over a year ago, because with back to the size of the herd being so low, the availability of feeder cattle is less than it had been. So in order to go out and get those animals, they have to compete on price. And instead of buying those, outlaying all that cash for those animals with a high break even, they've chosen to keep the ones in the feed yard and feed them longer, and
mm.
make them fatter. And the Packers have also been on board with that because they want to make up the tonnage that they're losing from the cow slaughter. And so it's been kind of a unique situation, as the cattle have just been pushed back and back and back. And you can see that in the weight data if you look at any weight data. Um,
And as part of that also, right? Corn's been basically
corn's
going straight
cheap.
down. Yeah.
Yeah. I mean, the price of corn, if a corn was at 8 or 10, at all-time highs, we would be having a different conversation. But so it's
Yeah.
in here, and it allows that strategy to happen also.
But that's also a weird part of this whole thing, right? Like you should, if the
Yes.
inputs, the feed is the main input, right? What else is there?
Yeah. Well, and the animal, but yeah.
Yeah, but that's one of the main inputs once it's
Yeah.
there. If that's declining in price, why is the output increasing in price? That's one of the weird pieces to the story.
Well, they
Um,
feed, because if corn's cheap, they feed it more. So
yeah,
like
yeah, yeah.
they put more pounds on. Like the old theory used to be, you would walk it off the farm instead of drive it off the farm, right? If prices were low, you feed it to your animals to try to get, some of that back.
Yeah.
But I mean, it 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 adds weight when corn's cheap. They feed more of it. Go
Talk through
ahead.
some of your old stories, as you call them, right? Or like, so that's your trade setups and whatnot. You call them stories,
Yeah, well, yeah, I mean, those are scenarios. Let's put it that way. I
scenarios.
mean,
Yeah.
yeah, I mean, the cattle market's kind of like it's a revolving scenario, right? So it evolves on itself. Like this drought, the drought of 2 to 3 years ago has now, the repercussions of that we're living through, and it's been ongoing. Well, there was lots of stops and starts along the way. There was, the whatever happened with the pandemic, with as the market crashed into the 80s, um, there's various things that come along to disrupt that story or delay it, but it always is kind of building on itself. And so right now we're making these highs because of what happened uh, with Mother Nature and the drought, and we're probably doing something to demand or changing some consumer sentiment somewhere, that in the future we think there will be a hangover from it. It's kind of when it ends up showing up, or what are the circumstances that bring it about.
So yeah. So what's your stance right now as you're looking at the market at all-time highs? What's the Wharton
Well, I mean, we
playbook?
think
Not
that
to give away the farm, so to speak, pun intended. But yeah.
I mean, we think the prices are going to be topping out probably for the year pretty soon. we think you're headed into more cattle, particularly in the Midwest. Iowa on that last report has 6% more on feed, and those cattle should start to be ready um, in the fall. That's when that region their cattle come to market. So we're looking for that to kind of pressure the market. Also with the border being closed, the southern border being closed due to the screwworm risk, that has certainly, I think, made supply tighter or made people more bullish because those animals just aren't able to come over. And Texas placed a lot. That was how they were getting a lot of animals. So Texas on feed numbers are way down due to that. And whenever that opens is anybody's guess.
Wait, so
I've
what is
heard
that?
that.
Screw worm?
Yeah, that's a parasite that lives on a fly that can infect the
Uh,
infect the animal, and
so the Mexican herds have screw worm?
they're in Mexico. Yeah, they're a couple hundred miles from the border. They picked them up. So as a precautionary measure, then the U.S. closed the border to feeder cattle imports from Mexico.
Mm,
That was back in, I think, November.
yeah. And what are those tariffed and all that? Is those
Well,
cattle,
no, they're
even if
just
they were
shut.
coming over?
No, there's no tariffs on the animals, but
Hmm.
they're just not coming over anyways.
Yeah.
I mean, it's frozen, it's closed.
And do we
So
get some
not
from Canada as well, or it's too cold?
no, we import feeder cattle from Canada, but there's no restrictions on that right now, so that's flowing fine.
Um, and so if you have this outlook, how far out will you play it? Or like you said, if there was the drought, when was the drought? 22?
Yeah, yeah, 21 to 23,
Yeah. So were you
24.
putting on positions 3, 4 years out thinking this would happen, or
No,
that's too far
no,
out?
that's too far. We
Yeah.
we just kind of trade the next 30 to 60 days or 2 weeks to 2 months, kind of like to say that's kind of what a thing should set up. I mean, we're looking for something closer than that based on whatever a seasonal shift in demand or a seasonal shift in supply.
Or interseason, like, but if it's every 2 weeks, like something that's happening in between.
Yeah, I mean, if it started or just each scenario is different, but I mean, we're short to medium term. We're not going to go super far into the back and do something for next year. That's not really our style. That's not what we grew up. That's not our style.
Yeah. And then I'm assuming, which I do have the numbers somewhere, but not in front of me, but that makes you uncorrelated to other CTAs, to trend following, to whatchamacallit, because you have one, you're not trading all the different markets, but two, you're on a different time frame.
It could be. I mean, that could be one factor. I mean, I don't totally know why we're uncorrelated like that, but I mean, we are. Um, but it could be. I
You
mean,
are, because you don't think about it. You're not trying to do things like they do, right?
yeah, I mean, we're just focused on our story and our system, and hey, we have we've been doing it together for so long. Talking, I mean, that you know, w- I think that's what kind of makes it unique is that the length of time we've been, kind of the whole group has been together,
Yeah.
and so we have our own little way we look at the things and triggers and signals, and you're kind of trying to remember. Um, Different scenarios that happened before and see if they happen again. And I think that's one thing where I think we were pretty good at, it's how we add some value is if something new does come up, I think that through our experience and through our long-term contacts, we can fit new pieces into the puzzle, you know, and figure out what it means to the futures market. Um, as fast as anyone we think, or
Yeah.
pretty fast. I don't want to be, I'm not saying we're the smartest guys out there, which we're not. It's just, I think we can plug some new stuff in, uh, well, or we're
And
pretty
how does
effective
that
at that.
look? You're calling around all the time, talking to feedlots, talking to packers, talking to these groups, and kind of getting intel. or is it
Yeah,
more?
we have commercial contacts that we talk to, and then also knowing how to read the reports, which reports to read. I certainly monitor all the news wires I possibly can through whether it's X or uh, any other type of sites that I can find. I mean, you're constantly combing the news for anything that could
Yeah,
affect it. I mean, anymore you have to watch everything because something could happen overseas that could completely invalidate your entire uh, theory.
yeah,
I mean, there could be something going on with tariffs or with the
mad
parasites.
cow.
So, and it's something. Yeah, I mean, there's just who knows. It's so interconnected.
What are your thoughts on, right? There's these groups doing what they call quantamental, right? So they're kind of systematizing all these fundamental inputs, or they're having AI read X and read these things and kind of trying to do what you're doing, but in a systematic quant way. Like, do you think
Yeah,
that's
I mean,
viable, or what are your thoughts on it?
well, I mean, I'm sure it's a factor. I mean, I don't know to what degree, and I'm sure it's going on. Um, and it's just hey, markets are always changing. Whether it was, the limit used to be 100 points and there was only 50,000 open interest, and then this change and the contract specs change. And I mean, it's always been, I think, it's always been changing. So it's a new change, and maybe it could make things more volatile or more extreme on prices if they can push it a certain way or someone can get trapped or whatever. But I mean, it's always been a moving target. It's
Yeah.
never been easy. I mean, I never have thought that trading cattle futures was easy it's just has always been difficult and a lot of work and a lot of discipline.
Yeah, I joked with, I think we had a guy on once. I was like, why doesn't Citadel or someone do this, right?
Yeah.
And the wrong answer to me is like, oh, they don't have the context I do. I'm like, well, they could probably buy those. But the right answer is me, it's too small. It's not worth their time.
Well, I mean, yeah, it's just, I mean, a lot of the news is available. It's not as it's a lot more transparent than it used to be, I think. And sure, I mean, it's not, you're competing when there's, money involved, people are competing for it. And so you're part of that. I mean, we just try to stick to our system and what works for us and not really worry about what other people are doing. And I think that's, something that you learned on the floor in the pit is because there were so many different traders down there, and this guy was a back month spreader, and that guy was a front month only, and necessarily hey, I'm a fundamentalist, and you didn't really everybody kind of stayed in their lane what they were good at. Some people were market makers and they were great at that, but if they tried to get into a fundamental trade, well, then they might have some difficulty. And so you would just try to focus on what market suited you and what style suited you and your personality and stick with that. And it's adherence to that I think over time, allows us to be competitive in the space.
And I think you could drive yourself crazy, right? Of like chasing on the floor back then, like, oh, that guy's buying. I wonder why
Yeah,
he's buying. Like he might have some weird reason, offsetting some
yeah,
book, got an order from the floor. Like, yeah, you can't know.
right. You have to focus on your trades and your system and what works for you. And if it doesn't work for you, then you change your system, but don't try to necessarily compete. So I mean that I'm sure that stuff's going on, and you know, hopefully they make a lot of money in it. But
And how's it look but between you and Bob? Like if he thinks you're going higher, you think you're going lower, what's that look like? You have a
well, I mean,
meeting
then
of
you
the
gotta
minds?
Well, you gotta, if you come up with that's an interesting question. The way we do it is, you come up with an idea and you kind of got to sell it to each other. And so,
Mm,
hey,
yeah.
look at this. And over, here, we think market's going higher. Well, the box beef cutout's going higher, and sounds like cattle are a little tight in certain areas right now. And oh, the stochastics is oversold. And oh, look, it's, you know, in this perfect area. So you've got to sell the trade to each other, and or if let's say it's not going well, then somebody could be like, well, I've just had enough of this trade. And then, being partners, you say, well, if somebody says that, you kind of just say, let's get out of it, and we can always buy it or sell it back tomorrow. And so we're never really afraid to miss any trade. If it's not working, we tend to try to get out of it and find something that is working. And we don't like um, sitting with big losers for long periods of time and having to drain
Yeah.
mental capital. And I mean, we used to say that, hey, there's nothing like nothing to get you bullish like getting long, and so just sometimes get out, and maybe the next day you come in and say, boy, I should buy this thing or I should sell this thing. And so, to try to like keep your mind clear, whatever the positions, if you're not sleeping because of your position, you've got the wrong position on.
Position. Which is an interesting point. Like as discretionary traders, how do you have any training with that, or how'd you just learn to live with that? Or that is a good theory. Like if I can't sleep with it on, it's the wrong
Because you got
position.
too many on,
Yeah.
and so I don't know.
And
That's
like
just
how
something
you, yeah, go ahead, sorry.
it's just somehow I picked up over that's probably listening to old timers talk, something like that. If they take you out to dinner, um, the mental side of trading is almost is or as important as anything. So,
Yeah, but it's right. The systematic guys, trend followers, like, hey, we've been here before. Here's the average of all our past drawdowns and this and that, and right. It's probably false sense of security, right? Because
well,
they
I
could
mean,
have
they
a
have a
big, huge one in the future, but they have this sense of security of the model's doing just fine. Don't worry about it.
yeah, they trust the process, and to some degree, we just do the same. Our
Yeah.
fundamental system ends up over time. We ended up figuring it out, and these things, you know, stuff ends up happening that makes it work. And because the fundamentals do are drivers. And if somebody's technical and systematic, that's once again that's the system they've chosen, and it certainly works. I mean, there's used to be an old saying that all systems work, people don't.
Mm.
And so it's if you just gotta kind of get out of your own way sometimes, and we're a fundamental based program, so it's not always just below this area we get out or above this area we get out.
My uh change to that line, I used to say systems don't break, they just get more risky.
There you go. Sure, it's a similar.
Yeah.
Um,
Like this model's broken. Like, well, no, or it's just way more risky than you thought. So prices are going to fix themselves. We don't need to worry about $300 steaks over there at Steak 48.
I don't. That's an expensive steak. Yeah, that's an expensive steak.
But it's crazy, right? There'll be a new steak restaurant in Chicago next year that'll up the
Well,
ante.
and
Someone's going to break that $100 mark.
we have to get into right now is seasonally is a slow time of year. I mean, you know how hot it is here in Chicago right now. Nobody is grilling right now,
Hmm.
right? So the weekend it was everybody's just inside, not just ordering takeout, right? And so and everybody's traveling. Kids are on a weird schedule, so that's why they call it the dog days of summer. Kind of, it's the lack of a fixed schedule. And then as you move into football season or back to school, well, then everybody starts having this more schedule, and that's considered a better demand time. And so even if you can sell less meat in July and August than you can in May and June, no matter what the price is.
Hmm.
And so if it was cheap, you can move less of it now because it's just nobody's eating, and in that way. And so we have to get into a better demand period and see if the consumer has really switched once families start having more dinners after school, or that type of stuff. Whatever the better scheduling is, or more rigid scheduling.
Here's what I want to see. The kids are obsessed with Cane's fried
Oh yeah,
chicken. Like every kid I know is just going there nonstop. I'm like,
yeah,
forget beef. They want this. I don't think it's all that great. I think Chick-fil-A is better, but it seems to me chicken is like taking over, right? Like,
yeah. I mean, I think that's maybe a generational thing that they're into a little bit more
yeah.
chicken fingers and ranch. And yeah, there's a Chick-fil-A here, it's packed. There's a Cane's here, it's packed. That's why McDonald's is adding the snack wrap. I mean, you got Popeye's chicken sandwich is excellent. Everywhere is basically adding chicken. I mean, I wholeheartedly agree with that. That anecdotally, it looks like the fast food chains are trying to add chicken. They're not adding burgers right now, and
Mm.
that's probably due that it's one that for some reason they like it better, and then two, it's probably at some level a price issue, a margin issue.
But
What
it's
are you
not
gonna?
cheap. It's like 18 bucks
Oh
for,
God,
yeah,
Cane's
it's
is
crazy. Yeah.
yeah,
I think that guy's a billionaire already, but
yeah.
it's
I mean,
another story.
Cane's, that's is expensive, and Chipotle is kind of the same way. I mean, that Chipotle is very popular, and so that's an expensive meal.
But in theory, those guys will become more beefy, right? Beef, the more money you have, the more beef you buy is kind of
Well,
like the
yeah, I mean
better the
that,
economy's doing, all this.
yeah,
And you see that in third world or developing countries, the more their GDP goes up, the more beef they eat.
correct. We believe that too. If you get fired from your job, you're not going to go out and have a steak dinner. It's a
Yeah.
celebratory type of meal, right? And let's say if you get a new job and you start doing better, you're going to go out and celebrate. Hey, let's get a steak. So it certainly fills that void for um, being a treat. You know what I mean?
Yeah.
Or a date night dinner or something like that. Special occasions.
Well, we'll see if these kids grow up and don't just take their dates to Cane's. Like, hey, let's go out.
Yeah.
Hey, let's go get some Cane's. Remember your
Well, they got
youth?
the ice there. They got the good ice there. That's what they like too, is that
My
soft
son
ice.
likes the bread the best. He's
Really?
like, I'm like, I don't know about this chicken. He's like, oh, the chicken's not that good, but you get this piece of
Oh,
garlic bread.
yeah, that is pretty
That's
good.
awesome. I'm like, okay.
Yeah.
And the sauce. And it's just dipping the bread in the sauce.
Yeah.
All right, Jeff. Anything else we should know? We'll put your
I don't think so.
contact info in the show notes. We'll put
Thanks.
the link to that blog post in there. And thanks for coming on.
Well, Jeff, when I saw you last week at the game and you're like, well, hey, you want to do this podcast? Of course, I was like, yeah, thinking it was maybe someday way in the future, not
Yeah, they're
going to
like, go.
necessarily be
Boom.
like 3 days later. And so I was pretty relaxed about it. And then today, as we got closer, I was like, man, I don't know if I know, have all these stats down quite good enough. And uh, it went well. So thanks for helping leading me
Yeah,
through it. I really appreciate
no
that,
worries.
and you made me real comfortable with it. So thanks.
Thank you for coming on. We'll see you
You're
soon.
welcome. All right, thanks.
You've been listening to The Derivative. Links from this episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.